Before we talk about the model, I want to show you something real, not opinions, not trust me bro. This is my trading journal and dashboard from a live account. I tracked everything, win, losses, average RR, all of it. For December, the model came out at around 28 win rate with an average 1 to 5 RR, and average loss was about $250 and average win was around $1,100. I'm not saying you copy this and get the same result. That's not how trading works. I'm showing you the important part. The process is repeatable. And in January, I'm still building the data. I'm not hiding anything. I will keep updating it as we go. Now, let me show you what cycle flow actually is, because this is the reason those numbers happen. And at the end of the video, I will show you the exact checklist that I'm using before entering any trade. So stay till the end so you know everything I am talking about. All right, quick roadmap so you know exactly what you're getting today. First, I will explain what cycle flow is in one simple sentence, and then I will show you the two phases, loading phase and push phase, so you can spot the momentum before it explodes. And after that, I will show you the data edge, how I use order flow plus gamma to confirm who's in control. Then I will put it in a simple framework, and at the end, I will give you my checklist so you can literally copy the process. Now, let me define cycle flow in one clean idea. It's repeatable cycle. The market loads, then it push. When the price is in the loading phase, it looks messy and slow, but it's literally pressure building. When the push phase starts, that's the momentum and expansion. That's where I want to be in. The difference with my model is simple. I'm not only looking for the candles. I'm checking control, buyers versus sellers with order flow and gamma before I take any trade. So as you see here, why I named actually this model cycle flow, because it's repeatable, so it happened many times. So for example, here we have it for the uptrend, it will always break the swing high. We have here swing high, swing low, so the price will break it, then we have loading phase, then it will again break it, then we have loading phase, then again it will break it, then we have loading phase. So why I named this model cycle flow, because it's a repeatable cycle. And why I named actually flow, because you want to know who's in control, buyers versus sellers in this loading phase. So what you're gonna look for is, the first thing is swing high. We have here swing high, swing low. So the price will actually push after breaking the swing high. It will push this first push. We don't take any trades. Why we don't take any trade? Because we don't know how high it can actually go. That's why I don't take any trades. Then the second thing is, you will wait for the ending of loading phase. So from this area to this area is loading phase. Then when loading phase ends, here in this area, you want to check order flow plus gamma plus market structure shift. Here is our game. Okay, this is our game in this area when the loading phase is about to end. So then we take the push phase that will break this swing high and actually go higher and higher. That's where I want to take my trades. Here the same thing. This is where I want to take my trade. Here also the same, and here also the same, because we know the probability to break this swing high in an uptrend is very high. So this is actually what cycle flow is in a simple way. So here we have three rules. The first one is push phase, its momentum, expansion, and loading phase is build up and compression. And you will confirm it with order flow plus gamma plus market structure shift. So this model is no guessing. Okay, when you use this thing, this is no more guessing. This is knowing what the market will actually do. All right, now let me show you what cycle flow looks like on an actual chart. On the left, you got the loading phase. This is where the most trader gets chopped up because it looks like nothing is happening. But this is the market building pressure. You will see overlap, small swings, and price kind of storing energy. Then on the right, you got the push phase. This is the clean part, expansion momentum, and that's where the money is made. Price breaks and runs and keeps printing moves in the same direction. So the entire model is simple. I wait for the market to load, then I only attack the push. And later in this video, I will show you how I use order flow plus gamma to know when the loading is ending and push phase is about to start. Loading phase, we have two loading phases, okay, in the market. The first one is in an uptrend or a downtrend, and the second one is in a consolidating area. So consolidating area is also loading phase. So it loads liquidity. So then when a price breaks to the upside or downside, it will actually go in this way. Consolidating area is a loading phase. And we have here in an uptrend, for example, loading phase is pullback. We have here pullback, loading phase, then push, loading phase, then push, loading phase, then push, loading phase, and then push. The same thing in a downtrend, okay? It will push to the downside, then it will pull back, it will again push, and then loading, push, loading, push. So this is where I want to be in, okay? You want to know when the loading phase is about to end, and then checking it with order flow, gamma, and market structure shift. So then you can actually take the ending of loading phase and targeting swing high, or just taking trade that is swing, okay? So then you will wait, for example, for 1 to 3 days, because you know a price is actually with you, okay? Price is building uptrend, and you will actually go with the flow. And the uptrend, it will actually repeat itself many times until on the higher time frame it changes structure. So this is loading phase. Push phase is after loading phase is ended, okay? For example, here we have on the daily time frame, it's building loading phase, okay? It's building consolidating area. So price when it breaks, it will go actually with the trend, and it will actually repeat itself. So it will go up, then loading phase, then it will go up, loading up, and it will go like this. The same thing here in an uptrend, okay? We have here push phase, loading phase, push phase, loading phase, and then push. So it will actually break every time the swing high in an uptrend, okay? That's why you need to follow the higher time frame, because a higher time frame tells you the bigger story, the bigger map where the price will actually go. Alright, this is where cycle flow becomes different from most strategies, because most people enter based on one thing, like for example support and resistance only, or candles only, or indicators only. I don't do that, okay? So cycle flow entries are confirmed with 3 layers. Price action tells me it might be ready, gamma tells me where it should happen, and footprint tells me if it's real. And when all 3 lines up, that's when the loading phase is ending and the push phase is about to start. So let me break down in a super simple way. First, a price action, okay? First, I look for the story on the chart. I'm asking, are we still loading, or are we starting to flip? So I'm waiting for things like market structure shift, break of an internal high or low, or clean change in the tempo, okay? So price action is the setup. Now we have here a gamma. I don't want the setup to happen in the middle of nowhere, okay? Gamma helps me to see where the market has a real reason to react. So if a price approaching a strong gamma level, that's a zone where you often see either a hard rejection or a clean breakout with the momentum. So gamma is the location. We have here a footprint, and this is the biggest edge, because price action can fake you out. Gamma can show you level, but it doesn't tell you who is winning right now. So I confirm it with footprint. I'm looking for proof like absorption, big orders getting filled without price moving, stacked imbalances, aggressive buyers or sellers stacking, delta shift, delta flips before price, and volume clue, volume increase where it matters. So that's how I know if buyers or sellers are taking control before the move up is on candles, okay? So footprint is the proof, and when all 3 hit together, that's my entry confirmation. So now let me show you how exactly this looks on a real chart, step by step. Now watch this, because this is the part that makes it click. I'm going to show you the exact process in 2 ways. First, the theory, then a real chart, and then we zoom into the footprint and gamma. So step 1, start with higher time frame, okay? So here, for example, I will start with higher time frame. For example, we have here 4 hour, 2 hour, or daily time frame. I'm starting to marking out the push phase and the loading phase inside the bigger trend. So here I will just, the first thing, mark like my swing high and swing lows. Okay, so if we have here swing high, we have here swing high, a price is breaking the swing high. Again, price is breaking the swing high, so we are actually in an uptrend, okay? And you can actually know with, for example, higher highs and higher lows, higher high, higher lows. So marking the push phase and then loading phase inside the bigger trend. So let's say the bigger trend is bullish, but inside that trend, price always pullback. The pullback is loading phase. This is where most people panic and enter wrong. They short into the loading phase, or they buy too early. Okay, so they are buying, for example, here in these areas while the loading phase is not even ended. So they are taking, for example, here sells or buys, and they are putting, for example, their stop loss here in these areas, and the price will hit their stop losses because you are actually not waiting for the ending of loading phase. You are not waiting. You don't have patience. Okay, so the first thing is you want from the price to show you actually where the loading phase is about to end, and then your take profit is in this swing highs, or just taking this trade as a swing trade and open it, for example, for 2 to 3 to 4 5 6 days. Okay, so you can either put your take profit in these areas or just taking here the trade and actually go with the flow, go with the trend, because you know uptrend will actually repeat itself until the price actually makes here, for example, market shift on the higher time frame, and then it will go actually down. Okay, so what I will do is going to the lower time frame. Okay, so I am going to analyze, for example, this part, the ending of the loading phase. So we have here on the lower time frame, for example, 30 minutes, 15 minutes, 5 minutes, you will see like this. Okay, you will see the market structure like this. You will see smaller market structure building inside this trend, inside this higher time frame trend. So here, for example, this is the loading phase. Okay, this is the same thing here. This is on higher time frame, this is on lower time frame. On lower time frame, you will see smaller market structure. Okay, so what you're gonna do is you will wait for market structure shift. So for example, on the first 30 minutes, 50 minutes, or 1 hour. Okay, and then start to see absorption on the order flow, for example, on the 1 minute time frame. So here you start seeing market structure shift, a plus absorption on the order flow, a plus strong gamma level here in this area, a plus maybe on this super low time frame you are seeing consolidating area is about to be broken on the 5 minute or 1 minute. Okay, so price on the 1 minute, maybe for example it will make here consolidating area and it's about to break. So now you have four things to follow, so you know actually the loading phase is about to end. So that's why you need to use gamma level, order flow, price action to understand when the loading phase is about to end. And here is example on a real chart. Okay, so we have here on the 4 hour a price is breaking swing low. So from this area to this area is push phase. So then what we are going to do is we are waiting for the push phase, then loading phase. You want then here in this area you want to know where the loading phase is about to end. Okay, so this is on the 4 hour. Don't forget this is on the 4 hour. Okay, so here in this area, New York session open plus market structure shift on the smaller time frame equals to loading phase is about to end. Okay, so here now I am switching to lower time frame. From this area to this area, don't forget, from this area to this area is push phase. We don't take the first push phase. Okay, then this is the loading phase. So you are seeing here on the lower time frame, it's building bullish market structure inside bearish a trend on the higher time frame. So this is a pullback. Okay, and here in this area we have here a resistance area, and we have here New York session open plus market structure shift on the smaller time frame. Okay, we are seeing here market structure is flipping, okay, from uptrend to downtrend. And how do I see that? Because we are seeing here a price is actually not breaking anymore swing highs. If it want to go and continuing the loading phase, it will go down and then up, breaking this swing high. Okay, but the price, so what the price did here is going up, going down and then up, but it didn't break this swing high. So the price actually made downtrend and it will continue. Okay, so as you see here, the price it continuing making downtrend in this area. Okay, and here what you're gonna do is you are waiting for New York session open or the ending of London session. So why I'm taking trades inside New York session? Because inside, for example, inside New York session is where banks are actually putting their orders in these sessions in this time. So in that area I want to take my trade with the banks because I know banks are trading in this area. Okay, and I know New York session actually will push in one direction. It's all about understanding what you are looking for. Okay, so here we are looking for New York session. New York session open, and the market structure is about to shift. Okay, and we are seeing here market structure shift, and then from this area you want to go actually to gamma to see strong level of gamma, and then with order flow you want to see here absorption is made in this area, and then you are actually finding where the loading phase is about to end and push phase the second push phase is about to start. All right, this slide is basically the whole cycle flow system in one picture. If you understand these 5 steps, you will never feel lost on the chart again, because you always know where you are and what phase you are in and when to enter the trade. So cycle flow is built around 3 questions. Where am I? When do I trade? And who is in control? So let's go step by step. The first thing is market context. First, I start with the bigger picture. I'm asking one simple thing: are we bullish, ranging, or bearish? This is my bias because I don't want to take random trades against the bigger direction. So this part tells me the weather of the market. Then range analysis. Okay. So next, inside the bigger trend, price doesn't go straight because it moves in cycles. So here I mark if we are in a push phase or a loading phase. Push phase means momentum expansion, loading means pullback and compression. This is important because I don't chase push candles. I wait for the loading phase to finish so I can catch the next push. The third thing is sessions. Okay, now I add timing because even if your idea is correct, entering at the wrong time kills the trade. So I focus on this. So I focus on the sessions where the volume is. So I focus on the sessions where volume is real, where moves actually happen. So these steps answer when is the market mostly like to move. The next one is order flow. Now we go from chart guessing to real confirmation. Order flow tells me who's actually stepping in. Are buyers absorbing? Are sellers getting aggressive? Do I see stacked imbalances, delta shift, and volume increase? These steps is where I stop being a candle reader and start reading who is in control. And the last one is gamma. Gamma gives me the key zones. It shows me where the price is likely to react hard. So if I have bias from a context, phase is loading and session timing is right, and the order flow shows control shifting and at strong gamma level, that's not random anymore. That's high quality cycle flow entry. Here, the first picture is the market context. A price is breaking swing highs. Okay, so we have here swing high is broken. We have here swing highs is about to be broken. Okay, so the first thing is market context. The second thing is the range analysis. Okay, you want to know where you are in the chart. Are you in a push phase or are we now in a loading phase? So the second thing is I will go to the higher time frame, marking my swing high. This is my swing high. Price did break it. Okay, so this is the push phase, the first push phase. Then this is the loading phase. Okay, so this is the loading phase. And then the third thing is we go to smaller time frame, for example 30 minutes. And what I did here is go into the smaller time frame, and then I will mark my range, or you can just marking your higher highs and higher lows is the same thing. Okay, and now here I want to see bullish, bearish, bullish. So now I know the loading phase is about to end and push phase is about to start. Okay, then I will go for sessions. So this is New York session. Okay, and here New York session is open. Okay, so this is also sessions is very important to combine it with your analysis. Okay, and then the last one, you want to check your order flow and gamma in this area to understand where the loading phase is about to end and push phase is about to start. So I use this before every single trade. The first thing is market context. Am I bullish, bearish, or range? Then range plus phase. Am I in a push phase or am I in a loading phase? Then the third thing is mark the key high and lows. Mark the key high and lows. Then the next one is sessions. I only trade when volume is there. Okay, so I take trade in London or New York session. And then the last one is entry confirmation. Price action first, then gamma levels, then order flow. If all 5 lines up, I take the trade. If one is missing, I skip the trade. That's it. So before you go, quick question. What was the biggest thing you learned from this video? Drop it in the comments. It tells me a lot and it helps other people too. So see you in the next video. Peace out.